Yeah, just about to start. Just bear with 1 second. Right, let's get going. The subject for tonight is day trading versus scalping. Okay, so you've got left to right, daily, 3-hour, 1 minute chart. So obviously, if you are going to be scalping, you are going to be looking at really small time frames. Okay, and some people even look at time frames smaller than a minute. But we'll go through. Let's talk about the definition of scalping and day trading, and then we'll look at the pros and cons of the two. Your scalping. People who scalp generally use a lot of leverage for just a few pips, literally sometimes even 5 or 6 pips. I've known people trade the euro at £50 a point, only looking for 10 pips. So yeah, if you're trading £50 a point for 10 pips and you can get 10 pips consistently, then you are going to make good money. If you get 1, 2, 3 stop outs of £50 a pip, obviously that is going to be a significant amount of money that you are losing, depending on your stop, of course. But that's the bottom line. Day traders like me, I'm looking for intraday moves. I want at least 100 pips out of the oil, which I've taken today. I'll show you in a minute. I'll show you a couple of screenshots I've done of trades today. And then we'll talk about what's good for you, what you might prefer to do, scalp or day trade. Right, let's have a look at oil on a daily chart. So you can see at the moment oil has been channeling. We've been in and out of this. So we've got this channel formed here. We've done a couple of moves underneath it, and we've done a couple of moves above it, but now we're just inside this. So, in a way, a channeling market, particularly if you're a scalper, is potentially better, because then you've got a very specific range that you can trade in, and you know that until this market breaks out one way or the other and opens and closes one way or the other, this market is probably could stay in this for days and weeks. All right, so just the fact you've got a tight range isn't necessarily a problem, but when you come down to the smaller time frame, then you can pick your spot. So is this market to be bought or to be sold? Good question. Well, if you put the 20-day average on, you will note this market, ever since we popped up here on the 11th of January, this market stayed above the 20-day average. So in my book, these pullbacks are still to be bought. And until that market closes underneath 78, this market's potentially if it's a bullish consolidation, will come down and test this support down here, potentially at 78, hold, and then start to make a move for 85. If it's going to be bullish, then we're going to close under 78. You short any pullbacks until you get to at least 70 and potentially lower. All right, so all the time it's above the daily 20-day average. You should, if you are trend trading, then you should be looking to buy. So 1 minute chart on the oil, to me, this is craziness. It is tradable. I mean, that's if you look at the 330 range, we had oil events today. So we look at the 330 bar. Where are we? Here we are. So we've just come back to the had a sweet move out of the invent range. So we went up, we tested it down there at about 80.40, which is where I got in. Climbed to close to 81.50. I moved my stop up and got stopped out. So I got that move. I didn't trade it in a 1 minute chart, but I'm showing it to you in a 1 minute chart. So now we are potentially, this is viable. We appear to be holding 80. So any pullback here is viable. If we ever break out through 81, this could start to make its way up to the top of that channel. So if it breaks up, I would normally buy a pullback to that range. So this kicked off at 430. So you got so it's an hour later, 60 minutes. There's 3:30 was the events. This is slow. I don't know why this is so slow. Come on. It's gone slow. So 3:30 was the invents. 4:30 was the pullback. That was worth nearly 100 pips. That move there was nearly 100 pips. If this move works out again, you could get potentially 150 pips. I mean, it was tradable on the outset because there was decent support under there before the events came out, decent resistance there. So a decent scalp would have been into, close to that 81, buying this support and getting out at 81. You had confirmation here on a 1 minute chart. So you could have bought that, I don't know what that was, 80.20, 80.10, not sure. So that's one way. So if you are looking to scalp, that's one way you could do. We'll look at if you are intraday trading, then you should be looking at bigger time frames. I don't actually trade off a 3 hour chart, but I trade off 2 and 4 hour charts. So I picked this one because it's not marked up. So again, if you are trend trading, like as we just said, the daily chart's above the 20-day average, so you're buying dips if you're going with a trend. So you get a significant close above here at the Euro session, so into the US, just as the US opens or comes to the desks. 12 midday UK time, you get a higher close, offer support. So that Thursday level is good for a buy. The resistance was up there. So that was worth, if you took this on a 3 hour chart, that was worth 79 to 82.5. That was worth 350 pips. Okay, and that's the difference between, that's the fundamental difference between day trading and scalping. If you're day trading, you are looking at these intraday, intra-week moves. So this intra-week move was worth 350 pips. That move I've just showed you on a 1 minute chart was worth 100 pips. So, I'm not knocking scalping at all. All I'm saying is I guess it's a question of how much time you've got. Are you around the screens at the peak time for US trading, if you're trading the US market? Let's look at I've been trading the FTSE a lot. Let's look at the FTSE. I've been shorting highs on FTSE. You can see the FTSE is just reconnected with the 20-day average. I've been selling these highs because it's hit a trend at resistance and started closing lower. But I may have to stop shorting this if we hold here at 77.50. Okay, so the reason I was shorting it because of a particular setup I use to detect daily charts. That told me that this level up here was shortable. And so on a 3 hour chart, the 3 hour chart had a sell pattern up here. It had lots of lower closes up here, but it took from Monday the 16th of January to Wednesday the 18th before that actually came out of this area here. If you are bearish, then you're going to short any highs. So I've been shorting 7,800. We've recently seen 7,700, and now we're picking up. We're getting higher closes now. Okay, so again, if you shorted that on Monday the 16th at these highs, then on the Thursday, so from that Tuesday the 17th, 2 days later, you got a couple hundred pips out of it. And on a 1 minute chart, here's the FTSE on a 1 minute chart. You get the UK Open at 8 AM. London opens at 8. So that's the open range from London today. And you'll see how, if you were paid, now it took 90 minutes before that actually broke down. So you've got a series of lower highs. And then every subsequent high is sold in here. So it's only so since the market has closed, it's only recently started bouncing up. All right, so if you like chart patterns, which I do, you can just quickly draw up some breakup patterns. Obviously, I've been shorting this, so I've been selling highs like that. Not in this time frame, but I have been shorting highs in this. So fundamentally, it's about having a system. It's not about jumping into these charts and just drawing up a few lines. It's about having a specific system that's going to allow you to, capture these moves. If you are trading to a longer term trend, even in your scalping, you'll potentially make more money than you will counter trend trading. All right, as far as I'm concerned, I've been trend trading this because from the point of view that we had a very bearish year last year, and this is, for me, this is a potential three-way correction. However, if we start closing up here, particularly start closing above 7,800, I will stop shorting, and I may even join the bulls. What I have been doing is buying dips in the US markets, because if you look at the S&Ps, S&P has spent most of January above the 20-day average, and we've almost come in contact with it at that low. So there you've got a 3-hour buy signal here, which fired off at 5 o'clock. So an hour and 15 minutes later, we are already rising out of that buy signal. Looking, if we break 4,000, it looks as if we can punch a lot higher. All right. So let me show you a couple of trades I've done today. Here is, I'll just enlarge that. So you've got I got it a little bit high actually, which I did regret. Took some heat down there. I thought this would pick up much earlier on the day. Anyway, it's currently pushing. It's almost up to 4,000 now, and so that is working on that front. And then here is a trade on the oil. Oh no, I haven't got the oil. No, I've not got the oil. Okay, so you can see the difference. There is, I mean, for intraday trading, I will be using smaller time frames to measure these support levels. And looking to see if I can pick up a better price. I've not succeeded today. I've got in way too high, but at least I'm making money anyway. I think I got in about 39.70, and we did a 20. We went underneath that by about 22 pips. So I wasn't a mile out, but it was a significant drop. If you want to join me in the trading room, then I'll just give you the information on that. I'm running a program in the next week. I've forgotten the dates, but it's on there. Right, that's a link to the program. If you want to talk to me about any aspects of the program, then drop me a line on the website. Any more questions? Let's have a look at the gold, because the gold's had a really good move today. Yeah, fairly shallow pullback. It's sort of flatlining, but all the pullbacks down here are getting bought, so it does look as if it could spring higher sometime soon. If we can just break this high, we should see 1972, 2000. So a good trending market. Look how the 20-day average is a nice clean push higher. All right, no questions coming in, so I will leave it there. Drop me a line if you would like some more information on day trading. So in essence, nothing wrong with scalping, nothing wrong at all, as long as you've got a good method of doing it. And one thing you could do is just get a 1 minute chart, stick a Bollinger Band on it. If you've got a trending market, just pick off the lows in a 1 minute chart, the low of a Bollinger Band. I am going to be on around the clock, yeah. I haven't been on it for a while because I've been so busy, but I am going to go back on that. In fact, the main man Simon messaged me yesterday. In fact, it's funny you should say that. Multi-time frame. Okay, that's a good idea. Yeah. Obviously, I've touched on that here, but yeah, I'll do. The next one will be a multi-time frame. I like that suggestion, so thanks very much. All right. Anything else before I go? There's another. Angie, is there another round the clock soon? In fact, I saw there's one scheduled very soon, isn't there? I think tomorrow. Right. Okay. Oh, I'm certainly not on that one, but let me know how you get on with that, because I know most of the guys who are talking on that. I know at least half of them. Don't know all of them, but I know half of them. They're all good speakers, so it should be a good session. Brilliant. Thanks a lot, guys. I will see you next Tuesday. Yeah, I was unable to do last night, but I will go back to Tuesdays from next week. Thanks very much, and I'll see you then.